Good morning. Good morning. I've got to put on my do not disturb focus mode. And then I'm going to start up YouTube. And I should be on there. Yes, I am live. Let me turn down the volume. Boom, boom, boom. I got to get my Active Trader Pro started. And I was checking out Active Trader Pro, you suck. Some of the old YouTube live channels and things of that sort, and I stumbled upon Kelly OG 367. Kelly OG, if you guys remember, I'm gonna get back to here. Oh, come on. What is the code? 318646. Boom, boom, boom. Okay, Active Trader Pro is starting. Kelly OG is one who I kind of may have goofed on a little bit. Kelly OG is, she's on YouTube. She's on here. We'll go to the About and join my trading group, Cash Capital Invest. And I am not promoting this whatsoever. Kelly OG charges, let's see, pricing. Kelly OG, About Us. Where's the pricing? Come on, Kelly OG. Here's our pricing. $75 a month for the Forex package. Limited use code 100K to sign up for our Diamond membership at only $21 for your first month. Diamond package, $21. Yeah, it's $199 per month. This is the most ridiculous thing. If you're doing this kind of thing, yeah, my channel's not for you. Forex trading, printers, sports betting package, sports stock options package, full access package. Let's go to the team. The team is Kelly, founder, Nez, and I don't begrudgingly, I shouldn't say, I don't hate on these people. If they want to charge you and you want to pay it, so be it. My problem is, where do you think she's getting the money to buy $1 million house for her parents? Yeah, let's go over here. Great editing, great social media presence, absolutely 100% an A+. I don't know. If she's making that much money, I give her credit. If she's going to teach you how to make that much money, I give you and her credit. There's something going on. She's getting her money. When you're charging, I can tell you from working at Earthlink, we're going to close that and that. I can tell you from working at Earthlink that the number one, absolute number one way to do business is to get people on a credit card paying a monthly membership subscription fee. It doesn't look like they give you anything. E-learning platform and video breakdowns for beginners. They probably host something somewhere, I would say. I'm just not sure. Let's see. Cash Capital Invest reviews. 22 reviews. 19 reviews. They have some pretty good Oh, here we go. Read customer reviews of one person reviewed them. Let's see. Trustpilot. I joined Cash Capital in mid-2022 for about 4 to 5 months. Honestly, it's a really garbage group. They provide signals for the members and their multiple admins, gurus providing them. Run away if you want to be profitable in the long term. Don't ever do signals. Learn to trade yourself. 100%. Learn to trade yourself. They claim to help you become an independent trader when it's not the case. They really push the whole follow and signals type of thing. Kelly OG obviously makes her money from membership fees. Yeah. And has no idea how to trade with her stupid Dorito pattern retail bullcrap. On top of that, I wasted another $100 on 2 to 3 different admins in hopes of maybe finding some education. They all know nothing about trading profitably. I'm now in a place that I'm trading profitably and independent. Look back at this horrible part of my journey, and I wouldn't wish this upon anyone. This was nothing else but a stepping stone, so run away, overpriced, just nothing to learn. That's just Googling Cash Capital Invest. It is clear when you look at the team. Let's look at the team. Oh, sports betting analyst. Jordan's extensive sports betting success. That dude is just out of high school. Sports betting? Yeah, 6-figure sports bettor. It's horrible. I mean, honestly, they do a good job of promoting themselves. She's got quite a extensive YouTube channel. Like I said, great editing, great presence. There is no way the $1 million house, I don't know, maybe it's a rental. A Lamborghini, probably a rental. I lied, I'm sorry. Oh, 3 months ago. Yeah, do not do this crap. I love it, though. I am so drawn in. So drawn in. Let's see. We're going to close down our... I wanted to look at a couple of things. By the way, markets are crashing today. CNBC is covering this like 9/11. It's not 9/11. There is significant damage in the market, though. One thing, let's see. Recap. I'm going to recap probably a good amount. I'm not going to recap everything. Let's see. Monday we had... let's see. I'll cover these. And I'm not going to do new scans. I'm going to cover DRV. I'm going to cover UDown, not Best Buy, not 3M. I'll cover IBM. I'll cover Lulu. Things that I did multiple kind of looks at. WBD. And there we go. These are the ones that I'm going to cover. Let's go to Tuesday. Boom. Tuesday, I think I had a ton. Yeah, I had a ton. I'm going to cover... Morning, Larry. We'll cover Oxy. We'll cover Boeing. I already covered DPST. We won't cover these. We'll cover Airbnb. I think I'll cover. I'll do a little recap of that one. WB and Schwab. We'll cover Schwab as well. Because... and then Wednesday and Thursday, I really don't go over anything. Wednesday, though, oh my God, we had everything. I'm going to cover Wednesday we had. It was because Monday and Tuesday were really good. QCLN, Wells Fargo, Devon. Did I have Devon in? No. SPG, Cleveland Cliffs. COPF. We had Devon already. PXD I'll put in. Chevron, I don't think that's a good one. BTU, we'll take those out. What scanned yesterday? Maybe we'll pull this. Alert at 5720. Okay, let's see. We are going to do today we're going to look at do XLG versus I. I'm going to type. Actually, I'll close this. And then we're going to go here. I'm going to open up bonds. There's the bonds. There we go. Well, 3 months, 6 months, and 9 months are off the table now. U.S. Treasury 0 coupons. We're going to do XLG, which is the 50 largest. I think it's the 50 largest. And we'll add a comparison to IWM. And This is a clear divergence. Look at IWM, which is the Russell 2000, Russell 5000, Russell 1000, whatever it is. But your small companies are just tanking. Your S&P 500 is kind of in the middle, but your 50 largest year to date, your 50 largest companies in the S&P with XLG. In fact, I'm going to put XLG in our TrendSpider watch list. 65 minute. I was trading yesterday on the 65 minute. MARA. Okay, we're going to do XLG. And I'm going to add this to our low cost. There we go. Yes. Okay. Hey, Brian. Good morning. Happy Friday, guys. I'm going to do a quick market scan. To see if anything crossed up to maybe buy for the weekend. I don't think there's anything, to be honest with you. And if you missed my my tirade at the beginning, it was about Kelly OG. She bought her, and I pulled up internet reviews of Cash Capital Invest or whatever her group name is, and bad reviews, just bad reviews. The only stock, there's 2 stocks that are up in the core investment group, and that is Meta and Roblox. Both of which I do not own, but I do own them in ETFs probably. So I got a lot to go over. Netflix is a good one. Enphase for the week is leading. Cook for Trevor, because everybody loves a good grill. QQQ, Intel for Willie. Dexcom for Sam. Oil is below 70. The XLG versus IWM. Bond inversions 2 to 10 is just reversing immensely. Here, 2-year U.S. Treasury 3.65, 10-year 3.33. That used to be almost about 1.5%. It's now less than 3 basis points. So that is a crazy, crazy quick. Nothing in brokerage. Core investments. Let's see if anything crossed up. Yesterday, by the way, bad day. And if you're not following my Twitter, I forget her name. Very pretty Wall Street Journal reporter. Profile. Let's see, who was it? Credit Suites, by the way. I took a picture of what I posted in the Facebook group and put it on Twitter. Anchored VWAP. Oh, Gunjan Banerjee. Gunjan. But she said only 2 of the S&P's 11 sectors gained today: communication services and information technology. I made a 0.58% on my long portfolio. I was plus yesterday by thousands of dollars. 0.58 is a pretty good day for me. Most of the indices were flat. I think the S&P may have down, the NASDAQ may have down. My point was, stock picking matters. It absolutely 100% matters. That was my point. MPLX, we had a cross up, but I think that was from the day before. May have just crossed up again. It doesn't have a great chart, because you can see with oil, but that's, 34, 35 down to 33. This is one I just hold. I mean, I've held it for such a long time. If we go to the weekly, it's probably in a negative on the weekly as well. Nah. It's kind of turned down a little bit. Again, the 200's kind of moving a little bit. The 50-day is still relatively positive. You're still above the 50-day. With most energy, you're still above the 50-day. So oil is turning down. Coke has just turned positive. And it's holding at 60. I mean, Coke is just one of those things. I don't care if you go into a recession. Freaking Coke. I drank Pepsi last night. I need to stop that crap too. This levered ETFs. I think you're going to start coming back today, to be honest with you. You were down 300 earlier, and then the goods producer number came out, and you're down 200 now on the Dow. Waiting for folks to join up. It's 9 o'clock, man. It is Friday. Oh, I did have an 8-day in red. We're going to, let's see, indicators. I might do a little setup here. Because I have, let's see, that's the fair volume gap. That's the 8-day in orange. Bollinger Bands, BBBY, volume gap, ultimate relative strength index, exponential 9, MACD. Okay, where is this? Exponential moving average there. I'm going to get rid of that one. That's the one I'm going to get rid of. There we go. It was a duplicate. Nothing in our low cost ETF. Let's see if any sectors crossed up. Nope. I am going to look to see if Let's look at sectors. There's no sectors. How is that possible? Let's see. Spider sectors. I am going to expand this. We're going to get rid of, you know what? I just want to get rid of that. I'll get rid of those two. And we'll add in the 8-day. Okay, so you're greater than on the current candle. Maybe because it's nope. XLE, you're down below that. XLF, you're down below that. XLV, you are below it. Wow, this scan works. Okay, you're above there. Now, why didn't this show up? Price close greater than 65 EMA 8 close. That's less than the 8-day. So this is XLK is the only one. It didn't show up. XLK should show up. That's crazy. Yeah. Morning, Sherry. Deutsche Bank. I don't know much about it. The one thing I do know is that, there's these, what led us into the financial crisis in 2008 is not the same thing as going on today. It's a confidence factor in today. 2008 was an actual liquidity crisis. So Deutsche Bank, in my mind, is a confidence crisis. And it's the fact that, listen, you went negative. You had negative bonds, meaning there were people buying bonds at a negative rate in Europe for years, right after COVID. So you're paying somebody to buy something that's going to lose value because they're going to give you the money back at less than the money back, but you're going to lose less than if you just held the money because inflation was going to take money away from you. So you have banks holding that stuff. Now what seems to be happening is, in Europe specifically, is that the credit default swaps. So it's kind of like, this is my understanding of it, Larry, and I am not an expert. I am a douche on the internet. Credit default swaps are things that basically, it's like shorts. They're betting on these banks to actually default on their debt, default on their credit. There are people in Europe, or I should say institutions, that are creating these credit default swaps that are enormously going up in value as they're traded. And it's a confidence crisis. That's, in my mind, that's the best explanation I can give you, other than, hey, Deutsche Bank and Credit Suisse just didn't have the capital to cover their deposits. Because, again, you were issuing these bonds that banks were having to buy at negative rates. So, unlike here in this country where I think we never went negative. Japan has gone negative before. Europe has gone negative before. It just doesn't work. Now, the problem is when you get an economy like Europe failing, when you get an economy like Japan failing, when you get an economy like the U.S., which is weak, not failing, it's weak, you could see significant downside. But I don't think you're looking at a 2008. I think you're looking at, something like, historically, it might be like 2018, where they raised rates too quick and they had to pull them down. From my understanding of reading and looking at Twitter and watching some news on this, the market is pricing in that the Fed is going to have to reduce rates. And so that's what you're seeing in, like, just look at the screen here, U.S. Treasuries. This 2-year at 3.67, that was at 5.8% on March 8th. That's what, 3 weeks ago, 2 weeks ago? That's unheard of. Absolutely 100% unheard of. I mean, you can get a CD new issue for 5.25 for 2 years, 5.5 for 3 years. If we're going into a recession and it's a long drawn out recession, that's going to look like freaking gold. Is the Fed stuck between a rock and a hard place? The job market is still going strong. If you want a job, you can find it. Your boy doesn't want a job. I'm going to try and look at something on our screen, the FinViz screener. Let's see if we can find a stock to actually buy. I'm going to go to all. And I'm going to look at, you know what? I'm going to look at the Dow. I want to look at the Dow. It's 30 stocks. 30 stocks. Let's look at the PE. Profitable. All of them should be profitable. We got 28. So we got some that are profitable. Let's go to 20-day. Let's go to 50-day. Let's go. Are there any? We're going to go below. Okay, 21 or below. Let's go 20% below. There's nothing that's 20% below. There's nothing that's 10% below. So we pull up the below SMA 20. Let's pull up below 50-day. Okay, so it's below the 50-day, which is midterm, below the 200-day. Let's look at short term, and let's look at below the 20-day. So you've got Chevron, Disney, Dow, Goldman Sachs, Home Depot, Honeywell, IBM, Johnson & Johnson, 3M, Travelers Companies, United Health, and Verizon. Of these companies, and Brian, yeah, big difference. I'm not a fan of staying with a job. Your boy here stayed with companies very, very long time, and part of that was comfort. But I will tell you, when I tell people, I think I was just kind of had lunch with somebody who was a little down and out, and I told them, I said, hey, change is good. I mean, I know my safe place is on the couch with the dogs watching a movie. But my productive place and the way I feel like I'm living life is jumping on an airplane and going to an Airbnb in the Swiss mountains and just hiking for a month. But you don't see me doing that. So, but let's continue on this path. So, okay. We can see the PE here. 52 Walt Disney Company has a super high PE. Probably don't want to get into that one. If we're heading into a recession, they have to grow earnings. Probably not great. Chevron, pretty low PE, but it's an energy company. So, again, this is a chemicals company. Dow, low PE. It's not going to grow a bunch. Goldman Sachs, they've got a pretty high PE. It's in the banking market. We're in the middle of a banking crisis and don't necessarily want it. Home Depot, pretty high PE for a home improvement retail in the consumer cyclical. Honeywell, pretty high PE for a conglomerate. It's a good, well-run company. IBM, this has a fairly high PE, but their forward PE is fairly low. 123, probably not a great price for it. Johnson & Johnson, low PE, but compared to United Healthcare, it's about the same PE in the same industry. Healthcare, drugs, blah, blah, blah. You got 3M. They're just getting killed with lawsuits. You don't even want that. Insurance company, I wouldn't want that. This one interests me. Verizon. And the reason it interests, and again, this is how you use FinViz to kind of look for stocks, and how I particularly look for stocks. If we look at the RSI and we say it's not overbought. Let's go under 50. Okay. They're all there. Let's see if it's oversold. 20. Nothing there. Let's go oversold 30. Nothing there. Oversold 40. There you go. Now Verizon doesn't show up in this one. So I'd probably scrap this and say, you know what? I just don't want it. Let's look at a gap. See if anything shows up here. I don't think so. No, I don't think anything's going to gap in the... Let's see, gap down. No, I don't think anything's going to gap. No, nothing really. Let's see, inside ownership. Nope. Over 10%. Let's see. No. Dow stocks, remember, because let's look at the forward PE. Let's just say they're all going to be profitable. Let's see if there's any above 50. No. Let's see if there's any below 15. There you go. Verizon. Forward PE is 7. I mean, this is just a company that's going to... I have visible. I mean, 6.98% dividend. You're going to buy a bond for a year at 3%, or you're going to get Verizon paying you a 6.98% dividend. Year to date, it's down 5%. You know what? I'm going to go over how we found that one. Let's I'm not going to do a scanner. Dow. We went Dow, and then SMA 200 below, SMA 50 below, SMA 20 below, and then forward P Verizon. Okay, we'll go over that. It's a good Friday. I think that's a good Friday podcast where I just kind of go over. I'm going to go over Netflix because they had a crazy day yesterday. Mara is an interesting one. I don't know. Oh, I do want to go over Schwab as well. Schwab, FRC, and DPST. Netflix, Mara. We're gonna go over SPY, and I'm kind of organizing my thought process. Intel for Willie, Dexcom. We're gonna look at this. Oil. We're going to take this. Bum, bum, bum. Okay. Sorry. Yeah, and by the way, Brian's comment on this, there's a difference between finding a job and having a job that pays. Employers don't want to pay a fair wage that pays the bills. If you've got a job that just pays the bills, I always tell people, hey, the job market is good. It's good out there, especially when you have a job, because you have nothing to lose. You can tell it, if they don't want to pay you, you just say, no, it's not something that I'm interested in. I'm interested in staying in a safe place where I want now. But in order to make the jump, man, if you've got some skills, and you can, talking, I got all my jobs by talking. Hit the thumbs up button, by the way. I did not say that. Hit the thumbs up button if you're new here. This is TrendSpider. This right here. I have my algorithm in TrendSpider. I do scans every day. I look for stocks on a 4-hour time frame. I day trade on a 65-minute candle that I have an algorithm for too. TrendSpider here if you want to sign up for it. There is a link in the description below that will get you 25% off, DSP25. I'll give you access to my algorithm. I just got a few messages this week. Oh my God, TrendSpider is awesome from people that signed up for it. I am not a guy who is charging you for, like Kelly OG here, who we went in. I am not buying my parents $1 million house. I am not pulling out $21,000. She charges about $100 a month. Yeah, she's making her money. She did not make $6.5 million. I mean, if she did, kudos to her. But based on the internet reviews of that, this ain't your channel if that's what you're looking for. I ain't going to charge you for much of anything. What I'm going to give you is access to TrendSpider, and it's not through me. It's through TrendSpider. You don't even pay me. You just sign up through my link. To get my algorithm, I got to have you on my team. So, yeah. And if you don't want to pay, if you don't want to do anything, don't do it. Don't do it. I don't care. Show up. Ask me to look at a stock. I'll do it for you. I am not a charlatan. I wish I had fewer ethics. Probably would be a lot richer if I had fewer ethics. Ninja skills, man. If you got ninja skills, I follow a girl on the internet, So Cookin', I think her name is. She's awesome. She's an actual physical ninja. I mean, I'm convinced of it. She does fight scenes in movies and stuff. And she's just awesome. I talk to her all the time. She's an incredible, incredible human. Physically, absolutely amazing physical skills. I watch her just because, God, I wish I had that ability. And, not everybody has that ability. If I work towards it, I probably could get that ability, but okay, let's see. I do have to bring this up too. Let's see. ATVI, EU, UK regular. It won't stop competition, so it looks like deal will get approval in EU. Still lawsuit in US, but deal is at $95 a share. If he didn't hear, the UK basically came out and said that Activision, the purchase of Activision by Microsoft will not inhibit competition. God, TrendSpider hates Safari, I think. I'm going to just reload it. And I think I may have to rewrite the algorithm. It's not hard. I mean, it's like takes me 2 seconds, but it's just more annoying. TrendSpider is cloud-based, so. But ATVI, they're going to announce that they announced that it's okay. I mean, we had this buy-in at 60. It dipped all the way down to 76. You're at 79. It's not horrible. I mean, the price historically is not super expensive. If we go to a weekly, it's just kind of been hanging there. I mean, it's got this gap up here where they announced that they would buy it. It went up to like $90. So, yeah, I mean, it's not a bad investment in my mind. ATVI, I think Warren Buffett still holds a shit ton of it at $80, somewhere in that neighborhood. Okay, I think I'm going to start the podcast because I do have a bunch to go over. Friday. It's Friday. I'm not in love. Bum, bum, bum. Oh, God, man. This damn cord keeps hanging down. We're going to start with SPY. This is Deutsche Bank. Credit Suisse is 86. Okay. Let's do this. Let's do this shit. Good morning. It is Monday, Monday. Man, it's Friday. I was singing It's Friday. I'm in love. The Cure. If you're an 80s baby, I was a 70s baby. Born in 1970. But yeah, you know The Cure. Either of those decades. I think you know The Cure and Robert Smith. I don't know. Let's start the day with some bad news. Bum, bum, bum. Deutsche Bank in Germany, it is in danger of going the way of Credit Suisse. Credit Suisse is trading, I just looked at 86 cents. This one is trading at $9.01, down 6%. Credit default swaps are spiking. If you don't know what those are, Google it. I am not your Google. I am Gary. But yeah, Deutsche Bank is probably in danger. It is taking the U.S. market down. There is not a lot of good news in the market. It's a Friday, so we typically don't buy on a Friday. You can trade on a Friday. I would sell some positions that you identified as short-term because it's Friday. You don't know what's going to happen over the weekend. If Deutsche Bank gets taken over, there's some liquidity that is needed, blah, blah, blah. That could have reverberations around the world for Monday's stock market. We're down 262 points. Up until about an hour ago, we were down about 350. Some goods numbers came in and kind of propped it up. So my guess is we kind of rally a little bit. I can't tell you that we won't be down, but I think this week is going to wind up being about flat. And if we look at SPY, I was looking at it last night. Support for the S&P is about 3,700. 4,000 has absolutely been the detriment of this market. In the morning yesterday, we got up to 399.29 on SPY. The afternoon before on Wednesday, we got up to 402. So 4,000 is it's a death. Your support is at 370 here. 3,700 is where, if you look at the weekly average, and we're looking long-term here, that is right. 371 is right where the 200 moving day average is. That would be your support level. Your resistance level is 400. So between 370 and 400, that's where you're probably going to trade. And if you think we're moving back down to 370, don't buy anything. Do not buy anything. One thing that I wanted to bring up to you before we get into the Qs is a chart that I was looking at earlier. It is XLG, which is the top 50 largest S&P. So it's the S&P 50 versus the S&P 500 versus IWM, which is the Russell 1000, somewhere in that neighborhood. It's small companies. And the divergence that we've seen year to date. So you can see the orange line that is up 9.48% year to date. That's the XLG. That's the top 50 companies. The middle line, the S&P, is up 3.26 year to date. The IWM is down 1.82. This shows you people are running for larger, bigger. Bigger is better. Too big to fail. That's essentially where people are running to. You can look at bonds. There is a huge inversion in bonds between there was between the 2 and the 10 year. Now, when people are talking about a bond inversion, that means you're getting paid more for short term than you are for long term. And we looked at these, and just a couple of weeks ago, March 8th was the high. I think the 2 year was paying about 5.08. I think the 1 year was about 5.2. So when you look at these moves, you're close. The 2 year is at 3.6. The 10 year's at 3.3. You are not that far away. So what that's saying is the Fed is going to have to reduce rates. And so when you reduce rates, do you always go up in the market? No, because we've got a problem. What's that? I think it was OJ. We got a problem. Yeah. So in my mind, I think between 370 and 400 is where you trade on the SPY. And we're at 393. If for some reason you can hold above 400, resistance becomes support. But we haven't been able to hold 400. And it's clear we haven't been able to hold 400. When you look at the Qs on a weekly basis, we've moved, but it has less resistance. It closed and we'll go to the weekly on the QQQ. It closed right at the 200-day last week, 285. So this one is really between 310 or probably 320, 315, somewhere in that neighborhood is your resistance level. You can see it's clearly bumped up here. It's had less resistance because you're in an upward trend, and you can see the two candles that we have for the last 2 weeks, they're green. They're moving up. You're above the 9-day. Do I expect it to stay up there? No, absolutely not. In my mind, you don't buy anything today. But if I had to buy something for a new pop, I would probably buy SQQQ to go from 32 to 40. It's oversold. When you look at TQQQ, this one is overbought, and we've been moving up in the 4 hour. If you look at a weekly on TQQQ, you can see it's still got confirmation above the 9-day. But I don't know that I'd necessarily trust this. The RSI is at 52. It's in no man's land. The MACD is kind of just getting up there. This one doesn't like to spend a lot of time over the 200-day. But TQQQ on the weekly, it just hasn't gotten up to the 200-day. The 200-day, by the way, is 36. It's a decaying asset, so if it makes that up there, great, fine and dandy. But it's going to be tough. Oil is back under 100. If we go over here to FinViz, and I'll do that screener with you later, we go to FinViz and we look at crude oil, 67.86. It's down 3%. Your energy names are going to get destroyed today. So, yeah. Expect the weekend to be a little bit tough on oil, I would say, too. Yeah. That's my notes. Let's kind of go over some stocks. Some of the banks, we want to look at some of the banks. They're just getting killed. Schwab, yesterday, it closed at 52.89. It's down a little bit in the morning, 52.75. In my mind, I think you can absolutely get into this one. The CEO bought $3 million worth. When you look at the insider trading, he bought $3 million worth on March 17th. I'm sorry, it's $2 million worth. There's been a bunch of March 16th, 17th, 18th. There's been a bunch of people buying a bunch of stuff. And they're all insiders. And look, they're all buys. From March 14th on, It's all buys on the insider. They're trying to project confidence in the stock. The algorithm has you still in at 57, but it most likely will get you out. The market just opened up. The new candle that's coming on the 4-hour, it's down at 51.53. It's having some problems. I think if you can get this in the 40s, I think you're doing really well. Again, for long term, I'm a believer that when the insiders buy at 60, you're probably good getting it at 40. Are you going to make money overnight? No. Is this going out of business? No. Are they going to have problems? Probably. FRC is a different story. FRC, I've told you to trade. I've told you to trade on the 65-minute algorithm. The 4-hour got you in at 14.18. Right now, this one is trading at $11.87. It's put in its its resistance level at about 15 or 16 bucks. I still say it's worth a roll of the dice if you've got it. If you're one of these people who would buy into GameStop just because somebody told you to buy into GameStop, First Republic's that's your bet. That's your bet. If you want something a little bit more risky, DPST. It's a triple levered ETF. This one will move. It's at $6.53. I remember people were telling me, hey, this one got all the way up to 10. You told me to buy it at 8. I got a great deal on it, blah, blah, blah. I hope you sold. I really hope you sold. Because this one's going to get killed with Deutsche Bank. I would not hold this over the weekend. I don't care if you're losing money. I would not hold this over the weekend. Just my take on it. I just don't know what benefit you have holding this over the weekend. Hope and pray is not a trading strategy. It's just not. So, yeah. Those are the 3 bank stocks that I've been touting this week. None of them have really worked out. I have not traded any of them. I've kind of made guesses, paper traded some. None of the trades have really worked out. But one that I was going to buy yesterday, and I pulled out of buying it, is MARA. I was going to buy this on the 65-minute algorithm, and we can go to the 65-minute algorithm to look at it. I have an alert set up for when it closes over the 8-day. And I was getting alerts at 8:47, 8:52, 8:55, but I went to the 5-minute chart on Active Trader Pro, and we can kind of look at that one if I just switch over. And we look at MARA. I said it doesn't have confirmation. It didn't have confirmation. It got up to $8.90 yesterday, and it never had confirmation. You can see right here, $8.90. That was where I finally got to my computer, and I said, am I going to buy this right below $9? Probably not. And I wanted to wait for confirmation on the 5-minute. It never got confirmation. So did your boy buy? No. It took this tick up from about 8:42 to 8:60. That looks like it's around 2 o'clock in the afternoon. Your boy was out hiking yesterday. So I took a look at it while I was hiking. I couldn't look at the chart. I said, yes, it has confirmation. I don't have the chart in my hand. I don't want to trade when I'm on the mountain. Last time I traded while I was on a mountain, it was in 2020 when I was hiking. This was during COVID. I think it was April of 2020. I bought a bunch of UCO because somebody on the mountain said oil's, it's at $2 a barrel, $10 a barrel. I think it was $5 a barrel, somewhere around there. Somebody told me, oil's going to go up. It's at $2 a barrel. Who thought oil could go negative? Your boy didn't think, oil could go negative. So oil went negative. So yesterday I was remembering that. I said, I just don't want to buy it. I'm on a mountain. I haven't had luck that way. Learn from your past. Journal your trades. Understand where you win and where you lose. That's the greatest advice I can give you. And don't take chances. So I didn't buy it. I'm glad I didn't buy it. Doesn't have confirmation today. I would wait for this one. Honest to God, I would just wait. So we took a look at MARA because it does look pretty healthy for a thing. End phase. One of the leading weekly winners on the S&P. And it has had a fantastic week. I mean, it really has had a fantastic week. Except it got killed yesterday. When I say killed, Yeah, you got in here at 212. Well, that's a 65-minute. Let's look at the 4-hour because this is one that crossed up earlier in the week at 209.65, and you're still in at 202. Do I think 202 is good for this one? Let's look at Enphase. It's expensive. I mean, the PE just kind of freaks me out a little bit. The PE, for some reason, Tesla doesn't freak me out because that one has traded against the PE. Enphase is one that last year traded against the PE, but I just don't think there is something that's going to happen with solar energy where they yank the rug out. The U.S. Government yanks the rug out. I just have this feeling. Some people know something is going on. And so Enphase, SolarEdge, all of those I trade. I don't own. And this one didn't have a strong enough trade for me to say absolutely 100% it's going to move up here because that 50-day is still in negative territory. So your medium trend is still down. Your long trend is down. This has had a major, major move since December. If you remember, January was great for most stocks, incredible for most growth stocks. It wasn't for Enphase. Enphase got killed. If we look at the 1 year, you're up 8% still. Year to date, you're down 22%. So it's all about timing on this one, and I just didn't feel like 200. I think 200 is your gauge here. I think under 200, this one probably moves up. Over 200, I could probably wait for it. So 200 on Enphase. Netflix, they soared yesterday. And I know I did, I think it was Wednesday. I did Netflix versus WBD versus Paramount. And I did all three of those, and I looked at them, and I said, Netflix is probably the one. And I injected my own personal bias in this. But when I look at it, Netflix is the one streamer that if I had one streaming service in my house, for some reason I had a dumb box that could only get one streaming service, it would be Netflix. And I currently pay, I think, $15. It's the one streaming service I pay for. I share passwords with my parents. Well, yesterday, Netflix announced, you know what? We're cracking down on passwords in Canada. And it works. It works. Huge gains in membership signups in Canada. That's going to be coming to the U.S. That's going to be coming all over the world. What they're going to do is they're going to raise their revenues by 25% because on average, every one paying household has 5 other households that are sharing the password, and they haven't cracked down on this. They're going to get gaming. They've got workout videos up there from Nike. This is going to be an all-encompassing streamer. You're going to see Peloton is nothing compared to these guys. I hope they get some great programming up there. I hope it's able to, control, like Peloton, when you put your watch on, you can put your heart rate up on the screen. Well, Netflix can do that if they want. It's the same, if you have an Apple Watch, you have Netflix. If you have an Apple Watch and an Apple TV and Peloton, you can do it. Well, it's just software. So, I think Netflix is probably that streamer. I think it's good like that. I'd still say under 200, buy it. Under 300, I'm sorry. We have our 301. You're still in that trade at 301. You're up at 327. You've almost got 10% at 301. This was a great, great trade at under 300. A great trade, a great investment, whatever you want it to be. Whatever you want it to be. But Netflix is a great one. I think WBD is the next one in line if you wanted to invest in a streamer. And this one is a little bit tougher, but David Zaslav, who's running it, is just as good as anyone at Netflix. This one has a gap up here until 17. It's trading at 14. This one has lost its way. Again, Netflix is just gaining because they're having subscriber gains, blah, 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 the whole thing. So I like them there. I really like Netflix. Trevor asked on the private Facebook group about Cook Traeger. He bought a Traeger grill and he's like, oh my God, I love the Traeger grill. Why isn't the stock doing well? The stock should be doing absolutely better. Their grills are unbelievable, blah, blah, blah. Well, let me ask you, how often do you buy a grill? if Traeger does make that great of a grill, it doesn't rust, doesn't need maintenance, doesn't need parts, doesn't need service. Well, if somebody sells something like that, and it's, could be at a premium price, but yeah, they ain't going to do well. I mean, if you buy a Traeger grill once in a lifetime, is that a great investment? I mean, if your house, let's say, Lennar, a home builder, were to build a house that you could have for a lifetime with no maintenance, you'd get it absolutely. What would be the margins on that? They'd have to do something like 100% margins. So when we look at Cook, the stock chart looks horrific. Now, from a 4-hour standpoint, you'd be in at $3.89. The algorithm loses you 73%. Buying and holding the stock loses you 81%. That's over a 2-year time span. So you do outperform with the algorithm, but you only win 8% of the time. Or I'm sorry, your average win is 8%. You win 24% of the time. So it's 1 in 4. You're better off going and betting on black and red in Vegas than using the algorithm to win this one. This has just been a bad stock. They're not making money. Their forward PE is 43. So they're going to have to grow their earnings a tremendous amount in order to grow into this. Year to date, they're up 35% though. You can see back in January, they were at $2.65. It's at $3.83. Trevor bought a grill. Performance over 1 year, you're down 58%. Your 52-week range is between 248 and 815. You are directly in the middle of this range, 53% from your high, 54% from your low. Completely in between. March 15th, Piper Sandler, overweight to neutral, $6, $4. Your average price target is $3.88. You're at $3.83. I can't imagine there's a reason you would buy this. Buy the grill, not the stock. Now, there have been some insider buys, fairly good amounts. I mean, $500,000. This guy, Jeremy Andres, he continues to buy it at about $2, almost $3. And he's bought about, looks like almost $600,000 worth, a little bit over that. So not a huge amount, but Cook, I continue to, Weber, I think Weber had a horrible, Weber, let's see. WEBR. They had a huge pandemic win. I'm talking huge pandemic win. If we go back and we look at Weber at the weekly, and ever since then, it's just been horrible. They went public. Yeah, they went public at about $18 a share, somewhere in that neighborhood. They're at $8 a share. It's just people don't buy a lot of grills. So I'd stay away from it, Trevor. There's a better place to put your money. Willie sent me a message. He goes, dude, I really like Intel. The VWAP has been kind of going up with the S&P. This one, I actually instructed my father, and my father thinks I'm a genius because of this. I told him after this earnings where it gapped down, I said, any reaction in the market is an overreaction. It's a $30 stock. And boom, he sold at 30. Well, your boy got him back in at 25. It's going to trade between 25 and 30. Intel is a horribly run company. They had every momentum that you could have in chips, and they let AMD, they let Qualcomm, and they let NVIDIA take everything. Smarter employees, smarter intelligence, smarter technology. They gave it all away. They basically focused on the PC market and said, you know what? Everybody's going to want a PC. Well, no, nobody wants a PC. Everybody wanted a specialized gaming PC. Everybody wanted to mine Bitcoin. Everybody wanted self-driving chips. That's where they lost their way. They just didn't do things right. March 16th, upgrade from Susquehanna. Negative to neutral, $26 price target. The average target price is $27. If you're in this at $29, when it hits 30, get the F out. You can get the F out now. Year to date, you're up 9%. Where are you going to put your money? Well, you're going to put your money into Qualcomm. Qualcomm at 120, anywhere in the 120s, it's at 124. Their average price target is 152. Their PE is 11. It's a little bit more expensive. Year to date, they're up 12. You can put your money into AMD. AMD's PE, a little bit extended, 113. These guys have great momentum. You're 20% off your 52-week high of 125. Year to date, you're up 54%. Your average target price is 94. The only reason it's 94 is because those price targets were, hey, we've got a glut of chips and we've got to give them away. They're giving them away. They gave them away. It's all done. You've got new technology. People are buying the chips. Boom, you're done. Finally, I would not put money into this. I would probably put my money into SOXL if I'm actually putting money into something chip-wise that is this. Your PE on NVIDIA is 156. This one was trading in January at 140. At 140, and you're at 271. Your average price target is 250. Year to date, it's up 86%. So it's just a little bit more. Intel, Willie, I'd say 25 to 30 is the range. You're just covering this gap up here to 30. You covered it back here on March 17th. I agree with you completely. I think Willie bought it about 25 or 26 as well. I think riding it to 30, you've got confirmation. Today, it is up 0.62. It's at 29.25. I'd probably just hold on to it to 30. It doesn't have a MACD cross up. It had a cross down, but it doesn't look like it's drastically going down. Their earnings are coming up April 27th. You really don't have a catalyst. So it's going to be their own worst enemy if something comes out. Sam wanted me, and this is another one that I did for my dad as well. Dexcom, DXCM, Zebra, DXCM. Dexcom does diabetes stuff. If you've ever seen somebody with the diabetes, the blood sugar patch, it's a little needle prick, and it puts this thing, and you can actually monitor it on your phone. I have a couple of friends who have it, and it's been life-changing for them. They absolutely 100% love it. Dexcom has been a stock that has been an absolute killer of recent. The algorithm makes you 68% versus the actual asset makes you only 30%, and that's over 2 years. So the algorithm actually has done well. The algorithm that has you in at 113. You're trading at about 113 right now. You're at 112.97. There is some danger here, and this is what I told my dad. And I'm not going to look at the fundamentals yet, but I will tell you what I told my dad. It was trading at about 116 when I talked to him, and I said, "Here's the thing: you're close to your 52-week high." I said, "Apple and others have developed some technology that doesn't need the needle prick to measure and estimate your blood sugar." Dexcom doesn't have that technology. They're still doing the needle prick. I can't imagine that something without a needle prick is as accurate as a needle prick. So I think you're a long ways away from that technology coming, but just the noise of that technology brought the stock from 120 down to about 100. Just the noise of that. It was nothing other than the noise. So I told him, I said, at 116, sell 25%. He sold 25%. When I called him again, I said, you probably want to pick this up around 100. So when it gets down, when I get this was when I alerted him 106. I said at 106, you probably want to buy a little bit more. Some of that 25% back. I think he bought the whole 25% back, to be honest with you. And now it's at 113. In my mind, with this range, I think the noise is going to bring this back down to 100 at some point. You're in a downward. You've got that button hook with this particular buy right here. I talk about the button hook all the time. This particular buy at 113, you got the button hook and it brought you all the way back. I think you're breaking the 200-day. I think you're coming back down here to about 105, 106. I just think the noise is what's killing this one. I think diabetics, you talk to a diabetic, man, they love Dexcom. The PE, super expensive, 142. You can see the multiple tops around 120. Its 52-week high is 134. You're 15% below that. Do I think it's going up there? Not in a freaking recession. Healthcare does pretty well in a recession, but not at 142 PE. That's a huge PE to continue. The average price target is 132, and you're trading at 113. So you do have some upside. If you get it at 113, here's what I would tell you. If you're a diabetic, you love this, buy it. I don't care what the price is, buy it. If you're using it, buy it. Just buy it. Dexcom has great technology. I don't think that there is a significant amount of danger in the stock at 100. I do think around 120, there is danger in the stock. And the reason I say that, look at the sales. There's nobody buying here. There were a lot of people selling here in June of last year at 300. But I think at 100, at 80, they're still selling. I mean, look at this guy. The president CEO sold $5 million worth back in January at 105. This guy, president CEO, again, $6 million, January 30th. So in January, he sold somewhere in the neighborhood of $11 million just on 2 sales. Oh, and look, March 1st at 109, he sold $4 million at 109. Oh, and look, the EVP, he sold $2 million at 114. The most recent sale is from the SVP corporate strategy. He sold $264,000. It's not a huge amount, but when you do get into those $1 million from the president and CEO at 105, 106, 110, you want distance level where you actually take a look at taking profits. You can see back here in January where it was at November 2021, it was at 156. November 2021. Boom. March 2022, during a down period, this was where the market sprung up. It was at 128. Then boom, as recession and increasing cost, blah, blah, blah. And there is a war on healthcare within the government, making things cheaper and blah, blah, blah. So Dexcom, great stock. I really, really like it. So Sam, I think you're fine in Dexcom, but I would use that 120 as your resistance level, not a support level. I'd probably use 100. Here, if we're looking at the weekly, you're looking at 90 being the 200-day. And if that 50-day does do a death cross on the weekly, look out. Look out. It happened back here, actually, February 2018, where it crossed down. You had death cross. But that was actually a bullish signal for this one. So, again, I think 110, fine, but I'd probably sell as it gets closer to the 120 mark. Activision Blizzard. We talk about Activision Blizzard a lot. I stopped talking about it, blah, blah, blah. The UK regulators said it won't stop competition for Microsoft to buy them. So it looks like the deal will get EU approval. There's still a lawsuit here in the US, so there is still some danger. But that seems to be lessened with the EU saying, yeah, it won't kill competition. And so what did the stock do today? It's up 7% to $85. The price for Microsoft to buy it is $95. $95 is your absolute top. So at $85, does it make sense? No. Any reaction in the market is an overreaction. I'd still wait for it to come down to 80. I think you're going to see this one pull back to 80 at some point in time. This ain't getting done anytime soon. Let's take a look at some of the recap of the week. We had multiple alerts on DRV this week. Monday, there was an alert at 5106. No, that wasn't Monday. It was 5520 on Monday. Where are you today? 6169. Pretty good. That's a nice 10%. If you get out today, you got confirmation. This is the triple levered bear in the real estate market. Just FYI, you got golden cross today. The 50 days crossing the 200-day. So I'd probably hold this one through the weekend. I know I say don't, but I might think about holding it. UDow. This is the up Dow. Boy, this one had a bad one. We had a secondary cross up here this week, but it's been down. $50.36. It still got you in. It will probably get you out. Today, I would say it'll get you out. It's just, it had this cross up. just didn't last. So you down. IBM, we had a cross up. Let's see where we had the cross up. We had some good technology. 123.79 was the cross up on Monday. You're at 123.66. You've had a pretty much a round trip. Again, I don't know if you're holding it for a week. I don't know if you're holding it long term, but you kind of got it where the cross up was. You got that button hook. We've just had a bad week where it's just kind of taking stuff down. Lululemon, different. They got an upgrade. I said buy it under 200, under 300. 292.89 was the buy-in. Boy, it's at 310. You got your earnings coming up next week, March 28th. You could be in for some good pop. This could get above the 200 day. The 200 day is 323. So if they have a good earnings, look for that one to go back up. Starbucks, we had a cross up on. I said anything under 100, you should absolutely buy this one. 99.07, you're at 97.99. I still say under 100, you could get this one. It's oversold a bit. At 35 is the RSI. I don't know. I mean, there's this gap down here at 89 to 85. We got to go way down in the S&P for Starbucks to hit that. So if you think we're going down, that might be one that you want to look at. WBD. I talked about Netflix, talked about WBD. We had a cross up here at 14.26. You're still in. It's probably going to get you out. WBD, I would say the 200-day is right at about 12. I think that's probably where you want to buy it. 14, a little bit expensive. Oracle, I don't think there's a price that you can pay for this one that's too much. Long-term, 85.28 was the price. 87.73. Anybody seeing TikTok yesterday? You remember that during the Trump administration when he was going to outlaw TikTok, Oracle was one of the companies that was going to take the TikTok data. Huge business for them. Oxy. This is one Warren Buffett continues to buy billions of dollars worth at $60. $60 is your swing. Got you in at $59.93. I don't think it's a horrible buy, but you're at 57. So you're down 1.46 today. Oil just continues to go down. We had on Tuesday again a Boeing cross up at 203.71. Got you out shortly afterwards with a slight loss. Looked like it's less than 1%. If you're in it today, like I am, I have one share. It's at 195. I think I bought it like 205, 206, somewhere around there. Venom on Tuesday, Viper, for those of you that actually look at the company name. VNOM is the symbol. 27.84 was the buy-in. You're still in this. It's completely oversold. This is just getting killed on oil. It's down at 26.24. Their earnings are coming up May 2nd, so you don't have a catalyst in this one for a while. But VNOM is the thing. Airbnb, I talked about Airbnb being a long-term buy if you wanted to buy it. 117.62, you're kind of taking a round trip. You got all the way up to 125. You didn't get 10% in this one, but it got the button hook. I think you could get in this. I think it may pull back to its 200-day around 105, but I think anything between 105 and 120 is probably a decent buy long-term on this one. You may go through, don't put all your eggs in one basket. If you want to buy it today at 117, buy a couple of shares. If you want to buy it later at 105, buy a couple of shares then. I mean, make your way in. Just remember, in December, this was an $84 stock. So when everybody was selling for tax loss harvesting, I made a big deal about Schwab crossing up. And I said I didn't make enough of a big deal. I expected this one to continue to rise. At 57.17, I said, you know what? It's got to cross up here. It's going to continue to go. Today, it's at 52.69. I was completely wrong. I did not buy in. I am going to buy in. I am just waiting for some of the volatility to level out. I said if I can get this under 60, I'm happy. I'm going to start a position. Probably not today. I don't want to do it before the weekend. Wednesday, we had XOM, Exxon. I personally own this. I own 6 figures of this stock. I've sold some of it for a gain. I'm up 100%. 106.66 still has you in. I think anything above 100, you're still good. I think anything below 100, you're doing really well. Exxon's just one of those. They're going to print money. QCLN, which is an ETF for clean energy that I personally own, has not been a long-term play. $50.70 was the buy-in, $48.77. You're below the 200-day. This one just can't get out of its own way. It can't stay above the 200-day. Morgan Stanley. I mean, we had Morgan Stanley, Wells Fargo, and a bunch of others cross up here on Wednesday. This one's one that crossed up at 88.98. Algorithm still has you in. Probably will get you out today. Probably. But it's at 82.81. Their earnings are coming up about April 18th. So not anytime soon. PXD. Your boy bought this one at 208. I still like it. Huge dividend at, I think, 14% yield at this point. They've said anything over $50 in oil, they're going to continue to pay out minimum 5% dividend. I'll keep my money in here. 188. The cross up is 193. I'll probably add to it. Here's what you have to know about PXD. We'll take a look at the weekly on this one. And it's long term. It had the ascending triangle. It broke down to that. It's 200 days at 164. You could be going to 164. I don't think you'll go much lower, but I think 164 is probably the bottom. I only put in about 10% of what I wanted to when I bought it. I bought it for the dividend, got the 3% dividend payout. Boom. Devon, I continue to say anything under 50, you should be buying in this one. Great dividend. 48.63 was the buy-in. You're at $46. This is in our core portfolio, as well as Simon Property Group, SPG. This one is down around 100. I said around 120. I thought it was a great buy. 108.09, it got you out a couple of candles later. This one's completely oversold. Right after the dividend, it just completely sold off, which sometimes it does. I mean, you can see if the market's not doing really well, the dividend's kind of taking it down. But it's a long-term hold. When we take a look at a weekly on this one, I think you're a little bit expensive, but you're in a downward trend with the 50-day and the 200-day kind of matching. You're below both. So it's a well-run company, pay good dividend, well-managed. Cleveland Cliffs, your boy bought this one at $20.50, I think. We're at $17.25. This one had a cross-up on Wednesday. I want to buy back in, as well as Mara. I have been looking at this one on the 65-minute and on the 5-minute. I just haven't found a good entry. I really just haven't found a good entry, but I am going to double down on this one and add more to it. I'm not done buying. I think it's a $30 stock. This one, it got you in at $18.38. You're still in that trade, but you're trading at $17.25. Talking about energy, XLE had a cross up, and XLE is the spider sector for energy. We also had COP, we had Schlumberger, we had LNG, which is Cheniere. So you've got all of those. Finally, I want to go over, okay, say you want to find a stock, and I want to go over the screen. I know I've done this before, and I just did this on YouTube. So here's where I would go. I'd go to finviz.com. It's free. There is no cost whatsoever to Finviz. And I did this. Let's look at the Dow. And the reason I picked the Dow is there's 30 stocks in the Dow. So we look at that. Then I want to look at something that is trading a little bit. Caleb, I'll look at Dollar Tree in a little bit. I won't do it on the podcast. I'll do it afterwards. I want to see something that's a little bit down. I don't want to buy at a top. I don't want to buy something that is trending up. So I'll say priced below the 200-day. So we pull up that up. So it went from 30 to 17. I want to look at it in the medium term where it's a little bit beaten up. So I look at the price below the 50-day. It went from 17 down to 16. Short term, 20-day, I go below the 20-day. It went from 16 down to 14. Then I want to look at the forward PE. And I want to look at the forward PE as low, below 15. And we look at this, and we're down to 10 stocks. So of these 10 stocks, let me look at what I've got. I've got Chevron. It's an oil. It's probably getting beaten down. It's okay. Dow Chemical Company. I look at it. The PE is 8. It's around where Chevron is. I think oil probably has better than the basic materials company. Goldman Sachs, PE is about 10. We're in a financial crisis. I ain't touching. IBM, their PE is 64. It pays a good dividend, but it doesn't have anything. Johnson & Johnson, it's a healthcare. I own it. I just, I don't trade it. I don't want anything short term. I don't necessarily need it. JP Morgan, banking crisis. I don't want anything to do with it. 3M in a lawsuit with the veterans over earplugs. I want not to touch this one. I'm not a big fan of insurance. Travelers Company, I don't want. Walgreen Boots, do I want it? Nah, it's not really making money. They're trying to turn this company around, blah, blah, blah. But what company do I see? Verizon. Their PE is 7. Their price is $37.31. When I go into Verizon and I look, it's got a dividend of 6.98. So we talked about bonds with the U.S. Treasury at a 1 year at 4.25 versus Verizon at 6.98% dividend. I can make more of a dividend at a stock that is trading below its 200-day, below its 50-day, and below its 20-day, which is beaten down. The target price on this, the average target price is 44. Well, look at this. We've got 3 most recent upgrades, all between $41 and $50. There's a Insider Monkey 13 best 5G stocks to own now. We go down to insiders. They're all selling around 36. They're between 50 and probably 36. They had some sales. These are $200,000 sales. This guy, Kyle Madley, he's putting in a pool in his backyard for $1 million. That's all he's doing. So of those things, I think Verizon is a buy. And I go over here to my, this is where we get into paid. This is TrendSpider. And I go and look at my 4-hour algorithm on Verizon. And I say, the stock is below its 200-day. It's below its 50-day. It's trading right around the 21-day, which I look at on here. I don't look at the 20-day because 21 pushes me out past 4 weeks. There's 5 trading days in a week. If you go 20 days, you're just hitting that 4 weeks. But I want to look at it a little bit longer than a month. So I do 21. And I look at a short term. I have a 9-day. That gets me under 2 weeks. So I look at this, and it's trading right along here. And I see, there's a buy at $36.88. And you know what? We're coming up on a dividend payment. Well, in a good economy, I might think of this as a decent buy. In a bad economy, I'm thinking it probably an okay buy because if I hold it for a year, I get paid 6% no matter what the actual asset price is. Do I think the asset price is going to go up? Let's go back and we'll look at their forward PE is 7.8. Their expected earnings per share this year is going to be down 4%. They're just spending a whole bunch of money on 5G. So can I put up with the volatility in this while getting almost 7% dividend, assuming they don't pull the dividend back? If this stock were to pull the dividend back, that would be the death of them. There's a bunch of gaps up here between 44 and 45 and a gap up here at 53. This only goes back to last year where it was a $50 stock and it was thought to be, oh my God, it's great. That was when rates were starting to rise and we were in this cycle. Now that rates have risen, if we're staying higher for longer, if they actually start to reduce rates, I think this stock may be one that actually benefits. The problem is they're going to have to raise rates on mobile phones, which is going to be next to impossible because there's a race to the bottom. Leads me into the sponsor, Visible, which is owned by Verizon. $30 a month, unlimited cell phone service. I think they may have even done down to $25 a month. Let's go to Visible. There is a link in the description down below. You can click the link. You get $20 off your first month. Let's see. Check out our plans. Boom, boom, boom. Yeah, $25 a month. It was welcome discount applied. And $35 a month for the big one. So you get if you use the link down below, you get $20 off your first phone bill. Simple as that. I get $20 off. You get $20 off. But yeah, Verizon is the stock. Visible is the sponsor. If you want to get a paid version, you don't want to use FinViz. FinViz is great. I mean, I used FinViz before I got TrendSpider. If you want to get TrendSpider, go to the link down below and click on TrendSpider. Use the code DSP25. You'll get 25% off. I give you my algorithm. All of the entry points that you see on this, this outperforms the market because if you were to buy Verizon 2 years ago, you'd be down 35%. If you would have gotten in and out based on the algorithm, you'd only be down 21%. So it outperforms the market. It provides this quote unquote safety. You still have to pick winners. That's why I say, hey, you have to pick stocks that are good. And that's why we use both fundamentals and charting. But this is kind of a safety, and it's a 4-hour chart. I'll also give you my 65-minute, which is a day trading stock. I give you access to all my watch lists, all my scanners, everything. Again, DSP25. Final sponsor is ID Shop. Printing needs. These are the guys that I work for. I'm going to, I think next week I'll be driving to New Jersey. Then I go to Chicago and to Houston for soccer events. I'm going to be traveling a lot in April. So, but ID Shop is the sponsor of that. It's just great. Any of your printing needs, any of your security badges, if you got even RFID badges that you swipe in at work, I mean, who's ever in charge of that? Tell them to go to ID Shop. Tell them to get a price from ID Shop. ID Shop is incredible. Their service is unmatched. It's a small company. They do everything for their clients. Major League Soccer loves them. NHL loves them. They have a bunch of people, huge corporations and small corporations. It's down here in the Southeast. The owner, Travis, great guy. Love those guys. Love everybody in that business. I mean, they are family to me. So idshop.com, you can just go there. Just tell them to get a price, whoever does your badges and stuff. Tell them Gary sent you. They won't know who Gary is, by the way, because I'm a contractor. All I do is travel for those guys. So I don't meet anybody in the office. I don't do anything. I think there's a woman that does my payroll. I may have talked to her twice. That's it. So if you have any questions, hit me up. I do think that we end up today. I just have this feeling that there's an overreaction to Europe, and that SPY, for some reason, we wind up going a little bit higher. In fact, we're down even to 391. We opened at 391.84. We're down at 391.27. The low was down at 389. So you're gonna hang on to this 200-day. That's essentially what you're doing until another bank fails. If Deutsche Bank fails over the weekend, boom, look out, 380. And then if another bank fails, you're going down to that support level, 3,700, 370 is what SPY would be. But let me know if you have any questions. Thank you guys for listening. Hit the thumbs up button. If you've made it this far, just head over to YouTube and hit subscribe on the YouTube channel. All the links are down below in the link tree. Just click on that link tree. You can find anything that I talked about in this episode, you can find in that link tree. So have a great weekend. Take care. Bye. Okay, export song to disk. Okay. DLTR. It's overpriced. But if we're heading into a recession, everybody's going to go to Dollar Tree for their Tide, for their bleach, for their Pepsi, for whatever you need. You're going to Dollar Tree because their margins are super small. They sell, crazy stuff. I think I read their broom. I bought a broom. I was looking for brooms, and they said Dollar Tree was the place to go because the Dollar Tree sold them for 79 cents. Well, you know what? I found a broom in Walmart for 84 cents. So I didn't go to Dollar Tree because I go to Walmart to shop for my groceries. 4-hour algorithm, it has you out. I mean, it's been a falling knife. You got this gap up here between 155 and 163. But here, DLTR, 18 for a consumer defensive discount store. Let's see if they list here. Look at the PEs. Ollie's is 38. BJ's is 19. I don't know. Those seem like expensive PEs for freaking dollar stores. Dollar Tree is 18. Dollar General is 19. BJ's Wholesale. Big Lots ain't making money. If you've been in Big Lots, it's a horrible, horrible store. Honestly, I mean, look at Walmart at 32. But you know what Walmart has that none of these others have? Groceries. I mean, you know, Costco, we talk about Costco all the time at 35. They make their money off of membership fees. So of this entire list, Caleb, I don't, the only reason to pick Dollar Tree would be because the PE is 18. It's a little bit low from a PE standpoint. You look at the average price target is 160. It's trading at 134. It's only 7% above its 52-week low. It's 24% above its 52-week high, or below its 52-week high. I just think it was beat. I mean, they put the price target at 150. I've never been a fan of these stores. Now, this guy bought $1 million at 142. The CEO on March 9th, he bought $1 million at 142. So, Caleb, I'll tell you exactly what I just told Sam about diabetes. If you use it, buy it. If you go to Dollar Tree, buy it. Because if you're going there, a lot of other people are buying it. I will tell you, Dollar General, I think, do they own Dollar General? Let's see. Who owns Dollar General? KKR, GS Capital Partners, an affiliate of Goldman Sachs and Citigroup, completed an acquisition of Dollar General. Huh. You know, maybe ask Kelly OG what she thinks of Dollar Tree. I hate to pick on poor Kelly. Hey, she's making a living. God is good. God is good. Mara has dipped back down to $8. $8. I don't blame her. I should make this very, very clear. I don't blame her for, I think she's unethical. I don't think she'd say that she's unethical. And the reason I don't think that she thinks she's unethical is because people pay her. And if she has made all that money, good for her. She's got something to teach somebody. Systems are out there to be taught. I just don't think sports betting expert is somebody who's going to make you rich. Let's see. SPTN. I'm uploading the podcast. So it's uploading now. SPTN. This is one of your crazy ones. I see 83 cents a share, 66 cents a share, 55 cents a share, 28 cents a share. So it's a falling knife. P's high at 25. 3.61% dividend. Average price target is 31 and it's at 24. Nobody's covered this since December. 2 sales at 31 from a director. I don't see any reason to get into SPTN. Right now it's at 24. It's kind of gone down from 25 to 24. The algorithm still has you in on the 4 hour. I mean, there's this gap up here between 30 and 31. I don't see evidence that it's going back to that. So that's my take on SPTN. MNST. Monster Beverage. I don't drink any Monster Beverage, but I do like Coke. I mean, here. If you want to see a trading range, this is 100% your trading range. Between 98 and 105, I mean, that's your trading range right there. You're right in the middle at 102. Your earnings are going down. Your 200 days still going up. Your 50 days kind of going down. Your 200 day is significantly moving up. Let's look at a weekly. Let me pull out this. Let's look at a weekly of Monster because I think it's a good chart. Yeah. You're bumping up into 52-week highs. And that's not always bad. You're 2% below your 52-week high. You got multiple tops here at about 105. You're trading at 102. So I think it's tried to get above that 105. You're expensive. Your PE is 45. I mean, let's just go into beverages, non-alcoholic. You got 17 here. Look at Vito Cocoa Company. Cocoa. Their PE is 134. There's a bunch of them not making money. But Monster Beverage here at 45 PE. Why wouldn't you just buy Pepsi at 27? Why wouldn't you just buy KO at 27? Joe, I'm not dinging. Yeah, I mean, splits are for days when you didn't have fractional share buying. I just can't imagine a split. Yeah, well, and I think Monster is one. I know, Constellation, STZ. They have partnered with, I think, Tilray on pot drinks when they are finally legal. And you can see Constellation Brands. I mean, look at that PE, 636. This one's just super overpriced. Beverages, wineries, and distilleries. So, but Monster, I can't say you're crazy for buying it, but I can say since December, it just hasn't. Here, you know what? Here. Monster versus the S&P. Which one would you be better off buying? I mean, let's look at a 1-year chart. You're better off with, it's far better off with Monster. 3-year. Better off with Monster. 5-year. Better off with Monster. It seems like 2022, last year, really kind of took off. Yeah. I think 95 is a good price on it. I think 95 is probably, listen, this is March of last year where it dipped down and it hasn't really followed the market. I mean, you can see the October lows. It didn't go back to March lows. But if I were to, overlay the S&P, you'd be way back down here. So it's held up really, really well. I think it's probably like Coke and Pepsi. I mean, here, let's do this. Let's add KO. and PP. Let's look at these. 5-year, Monster outperforms. Pepsi is 63. Coke is only 39. 3-year, Monster outperforms. You can see the S&P was greatly outperforming before then. But 1 year, Monster outperforms. Year to date, the S&P outperforms all of them. So, time frame matters. I would say at 95, I think you're good. I don't think I'd sell just because it's going into the 52-week highs, but I don't think I would buy at 102. I think 100 is probably, if I were looking at this and I were to say, okay, we're going to do a trend line, and I'd say right here is your trend line, right about 80. And I would say, putting that top in, I would say until you consistently close over 105, which you haven't been able to do, it's been a super resistance. I just can't see that being turning into any type of support. It's resistance right now. WM laying off. Waste Management is just a monster of a company. Oh, that's interesting. And Joe, first thing I'll tell you is do not drink that crap. It's hypocritical because I drink Pepsi. But you shouldn't drink that stuff. I don't even know what's in Monster, by the way. Walmart's great. I own Walmart. There ain't no reason to own. I own Walmart and Target. I own Coke and Pepsi. I don't own Monster because I just don't drink it. I don't drink any of the Monster stuff. Yeah, WMT is Walmart. Brandon, I love Walmart. I'll tell you, you should be buying Walmart when the Walmarts are selling because they're driving that pressure. I'll look at it in a second. But they're driving that price way, way down. I think anything under 140, Walmart is a buy. Okay, notes. $324.23. Okay, let's see. We're going to copy this. And I'm going to publish now. Publish. And then we're going to tweet. Show. Brandon, whenever you curse, I've got to show the chat. It shows up on my phone. It doesn't show up on OBS for some. Ooh, look at this. The pictures are back. Anchor fixed their shit. So I now get my picture up on Twitter again, which means more people listen. Yay. Yay for people. Because they should listen instead of subscribing to Kelly. Kelly OG. I'm obsessed with Kelly OG. Kelly OG. And I like that XLG. If you're looking at I really like XLG if you're looking at the top 50 companies. I may buy some in my parents' retirement fund to I hope people are happy with the way I look at stocks for them. Dexcom was pretty good. I'm telling you, Dexcom is a good company. Okay, tweet. And we're gonna oh, look at that. We're gonna tweet. QQQ and MARA. I'm gonna do I'm gonna take that out. Take that out. And we're going to tweet. And then Twitter. Boom, 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 boom. We're going to put in the top trades. AMD, UVIXI, SOXL, BAC, SPY, SQ, Tesla, SOXS, Boyle, AAPL, Amazon, Nvidia, SPXS, IWM, KRE, LabU, FXI, Coin, CCL, Ford, XLE, I'll put in. I think I had that, but oh well. Christian, I went over that a little bit ago here. I'll show you the stock chart. Wait 1 second. Let me just look at my profile. Okay. Oh, son of a bitch. They didn't show up with pictures again. It does take you to the... Oh boy, that looks ugly. Oh, it doesn't even put the links up there. What the hell? Boy, this is crap. I'll look in a second, Joe. Boy, that's crap. I just looked at the way the link works. And it looks horrible. Episodes. Let me see. Let's go to home. Let me see if it'll link me to my profile page. Yeah, God, it looks horrible. No wonder nobody's clicking on anything. Boy, that sucks. Okay. Let me bring you back over here. Safari. So, I think you said ship, Brandon. I don't know. I allowed it. Adderall and bangs. Brandon, quit taking Adderall and bangs. Hey, Joe. Joe Laster. Did I ever get into ATVI? No. I did not get into ATVI. I think I bought it and then I sold it for like, I think $1. I think I bought it around 74, 75. In this realm, I think 75 in February. I think I bought it at 75.50 around here. But I got out within, I think, a day or so when it got to 76. Or I'm sorry, I may have sold when it got to 77 up here because I saw this button hook happening. And I didn't think it might have been back here in December. It might even have been here, to be honest with you. But I didn't think it was worth holding on because, again, the cap is 95. So now it's gone from, I mean, it traded all the way up to 85.72. I think 85 is the cap. I think that's where it trades to the top. I think if you get at probably 78, I think you're good. Let's see if DPST. I don't think DPST crossed up, but I'll look at the 65-minute algorithm. It depends on. This is the 4-hour algorithm, and it got you in at 890. It's at 708, but at 708, it's been running pretty well, I think, because I think it got all the way down to $6. So this is the 65-minute algorithm. It got you out with a 1.47 loss. This one, ironically, got you out with a 9% loss, but I don't think you'd be out at about 818. You'd be in at that one. And then you're up here at about 9. So I probably would have taken my gain here, to be honest with you. But it's lost its way. The MACD is still, this is what's crazy. So look at the divergence. Here, you went from $9 to $7, which is a steep decline. Significantly steeper than where the MACD goes down. The RSI is at 34, so it's closer to being oversold. The volume has kind of leveled off. The 200 days moving down, the 50 days moving down, the 9 and the 21 are all moving down. I don't know that I'd necessarily get into this one. It's a Friday. I mean, what's the upside of getting into a triple levered ETF on a Friday? Over the weekend, what are the banks going to absolutely over the weekend say, hey, we've already found that we have enough deposits to cover us? No. Over the weekend, the banks may say, hey, we need saving. I mean, what do you think over the weekend is more likely to happen? The banks are to strengthen or weaken? I think, if Deutsche Bank gets some type of, shit, look at AI. I just saw AI come across the screen. This is on the 65-minute algorithm. AI down here at 21. It got you out at 81. I mean, it's just hovering around the 8-day. You're in at 25.35 on AI. I mean, I'm going to expand this. I'll take away the 50, 200, 21, and 9, and we'll add back in the 8, and we'll collapse this. So see how it hovers around this 8-day? This entire algorithm, by the way, is enter when the price closes above the 8-day and exit when the price is below, less than. It's greater than the 8 EMA is the entry, less than 8 EMA is the exit. And this one doesn't perform very well with AI. And I don't know why, but over 1,000 candles, you lose 2%. And it's probably because it jumps tremendously. But it says you lose 8%, or I'm sorry, 2.88% versus if you would have bought it 8 months ago. It's 1,000 candles, so it's 8 months in this 65-minute algorithm. But you'd gain 44% if you just bought and held the stock. You'd lose 2.88 if you actually use the algorithm. So it doesn't do very well. But AI is crazy. Yeah. And that's who I got ATVI from. Zion, I think. Let's see Zion Bank. I'm looking at 65 minutes for you guys on these one, not 4 hour. Zion, you're out. You've been out since March 22nd. Hasn't gotten you back in. It's well below that 8-day. Well below. My feeling on the banks is they're reacting to what's going on in Europe. I mean, look, Goldman Sachs is at 308. A lot of these larger banks are going to be asked to step in for the smaller banks. I mean, Bank of America, 26.54. Your boy bought a bunch of Bank of America as 30. In fact, I bought 2 lots at 30. I think it was 29 and change. I may have bought some at 28 and change. But I bought 2 lots for myself. I bought 1 lot for my parents. I'm not too worried about it. The one that I should have, Disney. I bought Disney around earnings at 112. And it went up to like 120. And I didn't sell. I should have. I was debating about it. It was a great trade. It was like going to be like a 10-minute trade. So, okay. I hope you guys have a good weekend. Indices check. Let's see. I'm going to log into my Fidelity account since I made mention that I was up when yesterday was kind of flat. Let's see where I am today. I am down 0.4%. And the markets are down 0.6, 0.5, 0.6. So Joe, 27 to 34. That's a 30% profit. Joe, I have no sympathy for you whatsoever. None. Yeah. Yeah, Christian. I mean, we've all been there. You guys know it. Everybody's in the same position. Yeah, buy Bitcoin. Hey, Balaji still thinks. Let's see. Let's look at. There was a discussion with Balaji. Let's see. I'm gonna look up Balaji. Let's see what he's saying today. He's probably saying, "Look, I told you." We are open sourcing DALI, a ChatGPT-like model that can do instruction following created for $30, trained 3 hours on one server, and the secret and magically. I don't know what that is. Think of the Fed and friends as the system administrators of Western fiat economies. With the press of a key, they can seize, freeze, create, or inflate any fiat asset, but they can't do that with Bitcoin. It's outside their control. Instead, it's under your control. Big banks are Bitcoin. I mean, he's on a roll. This is why conventional macroeconomic theories of what is about to happen may break down because confidence in the U.S. banking system is broken down. More than $500 billion in wires has already flown through the air in recent days. By banks, recent turmoil spurring many to move their money. And yeah, we're moving our money. I mean, I think why have Bitcoin and other crypto assets appreciated during this banking crisis? In our view, in contrast to those in the traditional financial world, many crypto assets face no central points of failure. Kathy Woods is 100% right. 100%. I mean, this woman is an economist. If you're not following her, you absolutely should. Fiat Bitcoin. Balaji is, I mean, follow Balaji. He's got a couple $1 million invested in that is Bitcoin. So realize he is he's got skin in the game here, but listen, my buddy asked me, are you moving anything into Bitcoin yesterday while we were hiking? And my answer is, I don't know enough about cold storage to actually do this shit. I just don't. I don't know enough. And so I don't trust Coinbase. I don't trust having my shit in FTX. I don't have my trust having my shit in an online brokerage. If I own the coins, I want the keys. And I don't know enough or trust I can't even back up my photos correctly here at home. I got 4 8 terabyte hard drives here. Probably half of them have failed. I just don't do it well enough. So do I trust myself with keys? No. Am I going to invest in Mara or some of those ones that, may go up with crypto? Yeah. Yeah. And I can read up on, cold storage. And I have a neighbor who trades Bitcoin. But, yeah. Okay. I got to go shower. I got to meet a friend for lunch. So you guys have a great weekend. Join the Facebook group if you're not in there. I think most of you guys are, but that's where I typically am, there or Twitter. I still am on Instagram, and I post stories on Instagram and stuff like that. But the two best platforms that I've found to share stuff with you guys are the Facebook group, and in fact, I got to go in there and see if any spammers. I find at least 1 or 2 spammers a day in the Facebook group, and I try and protect. If you guys see like an event in the Facebook group or something, and it's not for me, do not fucking click on it. It's some spammer. They've been setting up events in there. And every time I look at them, they answer the entry thing as the host of the podcast is Bozo. So. Yeah.